Is a slowing Chinese economy dragging down the Australian dollar? Well, back in early October, the Aussie dollar began a sharp drop against the US dollar, plunging over 12% before hitting a low on February 3rd. Now, a big reason for the slide was growing concern that tougher US trade policies might hit the Chinese economy hard. And since China's the top buyer of Australian commodities, it would be a headwind for the Australian dollar. Now, on top of that, many believed the US economy was about to take off amid tax cuts and deregulation. But over the last few weeks, things have shifted. Now the market is worried about a recession at home. Now, the Atlanta Fed GDP Now model went from forecasting 4% growth in early February to a grim negative 2.8% by early March. This week we got inflation data from both China and the US, and both came in softer than expected. Now, China's numbers fit a recent pattern of disinflation, which markets see as a sign of weaker demand. Meanwhile, the US CPI number, released on March 12th, showed inflation at 2.8% year over year, lower than anticipated and breaking the string of higher than expected numbers. Not surprisingly, the Aussie dollar dipped after the China data, but then bounced back with the US figures. Now, looking ahead, traders are keeping an eye on two big things that could move the Aussie dollar. One, any signs of escalating or of easing trade tensions with China, and two, any unexpected twist in inflation from either country. On March 13th, we get the US PPI numbers. That's worth watching closely because it could hint at how tariffs might push up raw material costs down the line. The CME Group offers three different sized currency contracts, the standard, the mini, and the micro, in order to match a trader up with their preferred risk tolerance. We're going to be using the micros for these examples. If a trader believes that the Australian dollar could bounce from here, they could express that by buying the June micro Australian dollar futures contract at 0.6295 and targeting a move to the late November highs of 0.6550. Now, a stop for this trade can be placed below at 0.6180. This trade can make $255 if the target is reached and risks $115 if you're stopped at your level. If a trader believes the Australian dollar could continue its longer-term path lower from here, they could sell the June micro Australian dollar futures contract at 0.6295 and target a move to the February lows of 0.6090. Now, a stop for this trade can be placed above at 0.6420. This trade can make $205 if the target is reached and risks $125 if you're stopped out of your level.